Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at Coca Cola. The Coca Cola chart has arrived at a key pivot. So it's one of the stocks. We haven't covered it for a while, but we did cover it back then, like weeks ago, months ago, and the market has followed nicely the projections. So we want to take a look at the updated chart today. Let's go. So we are on the Market Intel website, dailymarketupdate.com. Here we click on our US Titans section. Here we get to our US stocks section and we select Coca Cola. And you might remember it from months ago, actually, when we covered Coca Cola before, that the projection was still in this diagonal pattern for another high in wave 5 of a larger third wave. And the reason for the update is now that we have arrived in that trading area, in that key area here, from where we actually would expect a reversal to the downside, a pullback, the start of a wave 4 correction here in beige, for example. And the idea is that here we should see a rejection. First of all, we have a trend line. You can see by the way, this is the weekly chart. So you see the magnitude, the size of this diagonal pattern is just massive. So please be aware this can take a while to play out, but we're going to take a look at the 1 hour chart in a minute to see where exactly are we actually in this area. So you can see that these patterns are, well, this is a diagonal pattern. You have overlapping price action. We have wave 1 and wave 4 that are overlapping. The third wave is a very clear ABC structure. The wave 1 as well, the wave 5 as well, which we'll see on the 1 hour chart. And the key target zone here, and let's say trading area for a possible short trade. Now, if you take a short trade, that's up to you. It will depend on your strategy, it will depend on your risk profile. Not everybody feels comfortable with short trade, but maybe if you were long, maybe think about raising some cash. You can only make that decision for yourself. I'm just highlighting what might be generally reasonable. From an elite wave point of view, if the price breaks above that $78.33 level, then maybe it requires a reinterpretation here of the chart, yeah? So obviously, from an elite wave point of view, to consider a short trade, a stop should be set above the box, maybe 2% above the box. And if it breaks above it, that short trade setup is invalidated. To be fair, we haven't even seen any signal that a top is in. It might be wise to wait for a first 5-wave pattern to the downside and a 3-wave corrective rally, which forms a higher low, to wait for a clearer setup. And then, yeah, this wave 4 should start. It might take us down into the region around $48. I mean, at the moment we are hovering around 72. And the first indication that a move down is starting is a break below that green line at $67.20. If we take a look at the 1 hour chart, you can see a little bit more detail. You can see that in the preferred scenario, our expectation is that beige wave 3 should move a little bit higher. Now, we don't expect this to happen in a straight line. Idea is currently that there is going to be a pullback in what we label wave X, and the wave Z to the upside would complete this structure. This is the preferred scenario with a 65% likelihood. So that means if there is a move down and you're already short, maybe consider there could be one more leg up, and actually we assign that a 65% likelihood. Whereas with a 35% likelihood, which is quite high as well, but there is a clear distinction still. With a 35% likelihood, the top could form at any point now, and the next move down would be the move down that completes, or no, that would actually be the start of wave 4, because in the alternative scenario, wave 3 already finishes here in this region. We're now approaching here that $73 level, which is a 61.8 extension, which is one of these key levels from an elite wave point of view, a key target here for a 5th wave. So it could already complete that structure here. So please be aware of it. The key, the important to understand, I mean, we're talking here about the 1 hour chart, bigger picture wise, somewhere here, a top should form. The 1 hour still allows for one more higher low and one more higher high before a larger downturn should start. So this is now high risk on the long side, according to the chart here. And there is, let's say, quite a lot of downside potential now in what could be wave 4 in the preferred scenario on the larger time frame, or even with a 37% likelihood, just talking about the scenarios on the larger time frame, a larger wave 2 could unfold, which could then even see the break below $48.11 happen. So that's the update about Coca Cola. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in further updates, make sure that you follow us on the website. You can register for free. Also, let me know in the comments which other cryptocurrencies, stocks, tech stocks you want me to cover in future videos. Thank you very much. Bye-bye.